Did you know Warren Buffett, one of the richest people on the planet, pays a lower tax rate than his secretary? Yeah, you heard that right. Buffett's effective tax rate is around 17.4%, while his secretary pays a whopping 35.8%. How is that even possible? Well, today, we're diving into the world of the ultra-wealthy and uncovering the secrets behind why they often pay little to no taxes compared to the average person. Spoiler alert, it's not magic, it's strategy. Let's start with something called the buy, borrow, die strategy. Sounds like a bad movie title, right? But for the wealthy, it's a golden ticket to minimizing taxes. Here's how it works. Buy, they buy assets like stocks, real estate, or businesses that appreciate in value over time. Borrow. Instead of selling those assets, which would trigger taxes, they borrow against them. Think of it like using your house as collateral for a loan, but on a much larger scale. Die. When they pass away, their heirs inherit those assets at their current market value, often wiping out the capital gains tax entirely. Imagine you're a billionaire with $1 million in stocks. Instead of selling $10 million worth to buy a yacht and paying 20% in capital gains tax, you take out a loan using your stocks as collateral. You get the yacht, keep your stocks, and pay little to no tax. Genius, right? For them, not for the IRS. Now, here's another key piece of the puzzle. The wealthy make most of their money through investments, not salaries. And guess what? Investments are taxed at a much lower rate than regular income. While the average person pays up to 37% in income tax, long-term capital gains tax maxes out at 20%. That's why Buffett's tax rate is so low. Most of his wealth comes from investments, not a paycheck. Let's compare. The average worker earns a salary, pays income tax, and maybe gets a tax break for their mortgage or kids. But the wealthy? They're playing a completely different game. They use things like offshore accounts, charitable trusts, and shell companies to legally shield their money from taxes. And while these strategies are complex, they all boil down to one thing: turning taxable income into untaxed wealth. Let's not forget that the wealthy and corporations have significant influence over politicians and policymakers. They can lobby for tax laws that benefit them and oppose legislation that would close loopholes or increase their tax burden. So, is this fair? Well, that's up for debate. Some argue the system rewards smart financial planning, while others say it's rigged in favor of the rich. But one thing's clear: the tax code isn't just a set of rules. It's a playing field. And right now, the wealthy have the best playbook.